The time has come to start the meeting for institutional investors and financial analysts for the third quarter fiscal year 2018 earnings for Hitachi Limited. I would like to first of all introduce the speakers for today. In the middle is Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. To your left, Tomomi Kato, General Manager of the Financial Strategy Division. And Yasuo Hirano, Executive General Manager and Corporate Brand and Communications Division. Mr. Nishiyama, please. Please refer to 1-2, which is page 5. At the very top and the middle column is the third quarter fiscal 2018, and revenues was 6,782.9 billion yen, increased by 108.9 billion yen, or 2% increase. Next line is the adjusted operating income, 534.5 billion yen. And it was 7.1% was last term, and now it is 7.9%. Therefore, operating income ratio is approaching 8%, which is our target. EBIT is 305.4 billion yen, declined by 167.3 billion yen. This is reflecting the Horizon project impairment impact to the tune of 277.2 billion yen. As a result, the net income attributable to Hitachi Limited stockholders was 82.6 billion yen, a decline of 175.9 billion yen year-over-year. Revenues increased by 2%. What is contributing to this is the information telecommunication systems, the railways system, as well as the construction machinery. In terms of our income, contribution is made by semiconductors as well as smartphones, FA. Automotive systems have been subject to unfavorable environment. Therefore, there was a decline in terms of high functional materials and components as well as automotive system. However, the information telecommunication systems have improved, as well as social infrastructure industrial systems improved. And as a result, we have been able to achieve 534.5 billion yen in terms of operating income, which is the highest ever. 1-3. This is the waterfall chart of the factors affecting changes in revenues and operating income. The left-hand side is for revenues. Impact of reorganization of Hitachi Kokusai Electric was 120 billion negative, and foreign exchange impact was minus 27 billion yen. The foreign exchange impact looks large. Yen, dollar, and other foreign currencies are included as well. For construction machineries in the emerging nations, the strong yen is having an impact. There is also the Asian currency impact for the smart life and eco-friendly systems included as well. And business scale expansion was 255.9 billion yen. So that's a 4% increase if we exclude the reorganization as well as foreign exchange. Right-hand side is operating income, and impact of reorganization of Hitachi Kokusai Electric was 16 billion, foreign exchange 4.5 billion, and profitability improvement of improvement is 80.44, or 18% increase. Now, next page is impact of a Horizon project. In the third quarter, the nuclear power station construction project in the UK was suspended, and impairment of 277.2 billion yen has been posted as impairment loss. And left-hand bottom shows details of the project suspension. And impairment loss for the third quarter was 277.2 billion yen. But there is no cash outflow for this amount. In the fourth quarter, cancellation of contract-related expenses will be incurred, 21 billion, which will be posted in the P&L. Although it is not included, for the 21 billion cash outflow, will be 30 billion in the fourth quarter, and the remaining will be the 8 billion in the first quarter of 2019. Total is 21 billion other expenses. As written on the right-hand side, 21 billion will be a cash outflow impact, but there is no cash flow impact from the impairment loss posted in Q3. Regarding tax effect, impairment loss is not taken into account for taxable income, and therefore deferred tax asset is not recognized. Next page is 1-5. The revenues by market are shown. Right-hand side is year-over-year change. Japan is increased by 1%. Outside Japan, 2% increase. However, for China, is at 99% level, and 1 and 2% for up to the second quarter. But if we look at the third quarter alone, it will be 94% level for China. So third quarter, China stands out in terms of decline. 1-6 is the balance sheet as well as the cash flow statement. Asset was 9,693.4 billion yen. Compared to last term, decline of 410 billion. Horizon asset impairment is included in this figure. Now, CCC cash conversion cycle was 70.9 days. We will aim for 90 days at the fiscal year end. And Hitachi stockholders' equity ratio 32.4%, and the D ratio 0.31 times. Horizon's impairment has been posted. However, in terms of financial structure, as well as the ability to make investment, have been maintained in a sound manner. Below is the cash flows. The cash flows from operating activities was 202.3 billion yen. 130 billion IEP has fallen away, and in terms of construction machinery, working capital has increased. And therefore, year-over-year, there is a decline of 270.8 billion yen. However, cash flows from investing activities declined by 175.4 billion yen. Free cash flows to the third quarter was 26.8 billion yen. Next page. 1-7, I will talk about the business segments. First of all, regarding information and telecommunication system, increased by 3% in terms of revenues. Stock transfer of Alaxala network was a negative impact, but there was expansion of the system integration business. Therefore, overall, 3% increase was achieved. Adjusted operating income was 38.7 billion yen. This is driven by the profitability improvement in system integration business, as well as profitability improvement in the IT platforms and products. EBIT, in line with the improvement in operating income, we have also had posted gains by selling the land of Totsuko Works, ending at 60.5 billion yen. Social infrastructure and industrial systems, railway systems in Europe posted increase in revenues, and increase in revenues with the acquisition of SAL, 5% increase. operating income increased in revenues of the railway system business, as well as profitability improvement in industry and distribution field, and increase in revenues and profitability improvement in industrial products business. Overall, there was increase by 34.2 billion yen. EBIT declined by 211.2 billion yen. And therefore, up to the third quarter was 153.7 billion negative. This reflects the impairment of the Horizon project of 277.2 billion yen. Positive factors include the gains by selling part of Agility Trans-West Stocks, which is a leasing company. The result was negative 153.7 billion yen. Next page, please, which is 1-8, Electronic Systems and Equipment. There was a decline in revenues as well as earnings. Hitachi Kokusai Electric deconsolidation impact is included. If we exclude this, 91% will become 108% in the absence of deconsolidation. 700 million yen is the minus operating income, and this will also turn positive with the increase in revenues at Hitachi High Technologies and in healthcare business. With these contributions, in reality, we have increased profits. Construction machinery sales increased mainly in Asia, Australia, and North America, increased by 9%, or increased by 19 billion in terms of operating income. Against EBIT, there was increase in operating income, 19 billion yen, but we also posted exchange loss and posted structural reform expenses, therefore increased by 9.6 billion yen. Next, 1-9, high functional materials and components, increased by 5% in terms of revenues. This is because of Hitachi Chemicals as well as Hitachi Metals acquisitions driving up their revenues. And Hitachi Metals increase of sale price linked to higher raw material prices has been reflected. So all in all, increase in revenues by 5%. On the other hand, for operating income was minus 11.1 billion yen. A change of product mix and increase in raw material prices at Hitachi Chemicals and decrease in demand of materials for FA, semiconductors, and electronic products at Hitachi Metals. So a minus 11.1 billion yen for operating income. For automotive system, sales decreased in China and North America. And also the Clarion revenues were subject to decline. So operating income declined by 14.7 billion yen. And EBIT was minus 46.6 billion yen year-over-year. This is due to the decrease in adjusted operating income and posting of structural reform expenses. Next, 1-10. Smart, Life, and Eco-Friendly Systems. Year-over-year, revenues was 88%. Change of accounting to the net basis revenue for part of procured products in Japan and decreases in sales overseas, mainly in Middle East market, and price down of the home appliances in Japan have led to this decline in both revenues as well as operating income. In the increase in raw material prices as well as impact of foreign exchange have had an impact in terms of operating income. Corporate items and eliminations. So gains, EBIT increased by 37.2 billion yen. The gains by selling Hitachi Kokusai Electric stock has been included here.
Moving on to the next page, slide 1-11 regarding topics. First, with respect to the revenues from Lumada business. In the middle column shown are the Q3 revenues, 757 billion, up 12% year-on-year. The full-year forecast right now stands at 1,080 billion. The last forecast was 1,070 billion, but there's an upward revision made by 10 billion. So we're expecting a 7% increase year-on-year in terms of the revenues of Lumada business. In the third quarter, as part of the progress we achieved, we have shown examples of expansion of Lumada solutions. We have collaborative co-creation with Suntory Beverage Food to establish a production planning system, and another collaborative creation initiative for an insurance scheme with Tokyo Marine and Nichido. And as part of an international expansion of global co-creation, we set up a joint venture with State Bank of India, the largest state-owned commercial bank in India. We're going to leverage SBI's largest merchant network combined with Hitachi's digital technologies to create a digital payment platform that will offer better convenience and quality for people in India. Next, 1-12. What is at the top? You already know. We have made a decision to acquire ABB's power grids business. In the first half of 2020, we are to set up a joint venture with them. Below, we have described our initiatives for the structural reform of our automotive systems business. For Clarion and Hitachi Automotive Systems Measurement, we're going to transfer shares. We're also going to transfer shares of commercial vehicle steering business and transfer part of shares of Hitachi Vehicle Energy, which engages in automotive lithium-ion battery business. By the end of this fiscal year, we are expecting to close these deals. And so proceeds from the transfers of these shares have been reflected in our full-year forecast, as I will discuss later. And in the railway business, we sold part of shares of Agility Trains West Limited. So that as well, together with the transfer of automotive system business, is reflected in our latest forecast. We have additionally acquired the remaining shares of Ansaldo STS, and as of January 30th, we have made it a wholly owned subsidiary in order to generate more synergies. Moving on to slide 2-1. Outlook for fiscal year 2018 on a full-year basis. Revenues, 9.4 trillion. Adjusted operating income, 750 billion. 8% margin. These remain unchanged. EBIT, 500 billion. Impact from Horizon is reflected in EBIT. And that was done as of January 17th. And we have also reviewed non-operating numbers to make EBIT 500. And net income. $400 billion was the earlier forecast. 300 from impact of Horizon. We said 100 billion. But automotive system as well as railway systems-related business transfer of shares have been done or are planned by the end of March. We are certain about these deals, and so these have been reflected, and structural reform and other reviews have been done. So we increased the forecast by 80 billion, and so net income attributable to stockholders 180 billion, upward revision of 80 billion. And there are two far-right columns for your reference. Impairment loss, impact from the Horizon project. Second from the bottom, net income attributable to stockholders, minus 294 billion. This is the impact to be seen this fiscal year. Far-right column, this again for your reference. Had there been no impairment loss from Horizon, net income would have been 474 billion. But because of Horizon project being consolidated, impairment loss had to be posted, therefore negative 294 billion. Moving on to the next slide, 2-2 as well as 2-3, I would like to just highlight the changes made to the forecast. Information and telecom systems. IT platform and products profitability thereof has been improved, which was reflected. Therefore, upward revision of 7 billion. 10.4%, 207 billion. And social infrastructure, industrial systems. Building systems has seen an improvement. Industrial distribution systems have seen improved profitability, so increase of 10 billion. And for EBIT, there have been gains from Agility Trains wet stocks being transferred, so increase of 39 billion. On the other hand, high functional materials and components, Hitachi Metals and Hitachi Chemicals have had downward revisions. Therefore, compared to the last forecast, downward revision of 30 billion. 2-3 at the top, automotive systems. Downward revision of 12 billion for adjusted operating income for automotive systems. But on the other hand, as I said earlier, proceeds from sales of businesses, they're being reflected. EBIT, therefore, has had an upward revision of 40 billion. So EBIT, latest forecast, 90 billion, adjusted operating income, 38 billion. Next, smart life and eco-friendly systems. Up until the third quarter, profitability has declined, and that is reflected. So downward revision is 4 billion for adjusted operating income. And corporate items and eliminations, there's a positive 22 billion added, as we have been saying, products-related business. And the business environment for products, they remain tough. We had a risk buffer of 20 billion, and that is being reflected here. So that concludes my presentation. Thank you.
If we would like to move to Q&A. The floor is now open. Question. Regarding third quarter, it seems against the budget. How did it fare? How did it fare? Please elaborate. Answer. No, against the internal budget, in terms of revenues, it was flat, equal to the plan. But in terms of foreign exchange, 30 billion increase because we're assuming 105 yen for the dollar, but the actual rate was 113. So the positive impact of foreign exchange by 30 billion yen. So this is a decline of 30 billion yen. Materials, as well as electronic devices, as well as AMS, and the smart life and eco-friendly systems have had impact, and it declined against the plan. In terms of operating income, total plus 10 billion improvement against plan was achieved. Foreign exchange impact was 5 billion, and other organic improvements, 5 billion. The deterioration was seen in the areas for materials, as well as smart life and eco-friendly systems. Improvement was made in information telecommunication system, as well as social infrastructure industrial systems. Question: what is the amount? Now, in terms of operating income, third quarter, there was an upside of 10 billion. But this is mainly for the information telecommunication systems. In the front SI business increased. This has been front-loaded from the fourth quarter, and there was also platforms cost reduction and made progress, showing a significant improvement. Question. It seems that the business environment is undergoing change. In the fourth quarter, what is the direction you are pursuing? So progress up to third quarter was very good. Perhaps you have not changed. It seems conservative in the fourth quarter because you have not changed the numbers. What is your view on this? Answer. Up until the third quarter, materials, as well as high-functional materials, as well as automotive systems have deteriorated. But information telecommunication system and the social infrastructure have been improving. Looking at the progress made compared to the past, in 2015 was 60. Third quarter accumulated basis is 64%. 64 and 2016 was 64%, and 17 66%, and 2018. But this fiscal year, against 750 billion plan, it is 71%. So the progress made has been very good. But regarding the outlook for the fourth quarter, the business environment remains difficult. Especially in the third quarter, up until the third quarter, the unfavorable business, such as materials related to automotive systems, remain difficult. And that is reflected in these numbers. In terms of construction machinery, in the fourth quarter, we are expecting a decline. But beyond China, the market remains strong. But the foreign currency for emerging countries are difficult to forecast. That is the reason why we are taking a conservative outlook. This was also shared by Hitachi Construction Machinery. The macroeconomic situation remains opaque. And high-functional materials, metals, and chemicals, automotive systems have been impacted. And this difficult environment has been factored in as well. Therefore, we believe that the environment, difficult environment, is likely to continue. So it remains very difficult. But in the social infrastructure segment, this is an important focus. And for fourth quarter, compared to last year, railway systems are growing in terms of revenues. And industrial product, major projects in Reading have run its course, and therefore it looks more favorable today. Regarding the social infrastructure segment, in the third quarter, year-to-date basis, all the business units have increased operating income. There are differences in scale, but all business units have recorded increase. But as I have already mentioned, projects are no longer incurring red ink. The products business, such as elevators, building systems, have been subject to material cost increase and price decline. However, they have been making efforts in terms of cost reductions and making progress in that regard. And railway systems remain strong. Therefore, for the third quarter, all the business units have recorded increase in profits. That is the trend we are seeing today about the macroeconomic situation, as well as in certain industry areas. Demand remains weak, and we should be prepared for such a trend. in the area of high functional materials and components as well as automotive systems. Regarding China, there is a trade friction between the US and China. There is concern in that regard. What will be the impact on your company? I understand that elevators and escalators are doing well. What is the current trend in terms of China? Answer. On up to third quarter, the most significant impact in the third quarter was in the area of automotive systems. There are two factors. The passenger cars sales demand has declined. The other is the finished car manufacturers sales volume has declined. So automotive systems have had the most significant impact in China. Now, elevators are subject to fierce competition. That remains unchanged. And the unit price is declining. But volume, in terms of elevators and escalators, are increasing. On a full year basis, the outlook for 2017 was 500,000 and 550,000, 505,000. But as we announced in the second quarter, is 520,000 was the forecast, and currently it has gone up to 531,000 units. So price decline is there, but the volume is continuing to increase. Revenues remain flat year on year, but the price decline is narrowing. It is becoming smaller. And cost reduction efforts are making progress. Therefore, the impact is limited. If anything, profitability is improving.
あと2点だけやっぱその中には
Seems that automotive system is very difficult. What is the situation currently? What are the measures that you will be implementing going forward? Please elaborate on the automotive systems. In terms of the overall strategy, we have decided to sell some of our businesses. This is because we will be implementing the strategy of the selection and focus in the automotive systems business. Overall, there is electrification, electric parts, motors, the power parts, as well as ADAS, and autonomous driving will be an important focus for us. And within the conventional products, we will focus on areas where we can secure a top position globally, and we will implement the strategy of selection and focus in these areas. And that is the reason why we have reorganized the business this time. In addition to this, we will reduce all costs so that procurement cost can be reduced and indirect cost can be reduced. Resources, inclusive of manpower, will be subject to review. And this effort has been underway from July of last year. On a quarter-to-quarter basis, gradually, improvement have come to the fore, and a full-fledged impact is likely to be reflected in fiscal year 19. When we share the information regarding the midterm management plan and strategies for fiscal year 2019 will be formulated, and in April we will report to you the profitability by segments. In North America, the production base has been deteriorating, and Japanese experts have been sent so that the operations can be improved locally. But from the third quarter, productivity efficiency improvement has been made. And toward fiscal 2019, we will continue on this trend of improvement. Last question is simple question. You said that the horizon is not going to have an impact on cash flow. What is going to be the cash flow for this fiscal year? Answer. On a full year basis, free cash flow, according to the original plan, April last year, we said that we will have a surplus. But with the selling of business as well as unwinding of cross-shareholdings as well as selling of real estate have been made. Therefore, on a fiscal year basis, 400 billion cash flow free cash flow is being planned. Thank you.
Question. This is related to one of the earlier questions raised. Up until the end of the third quarter, free cash flow deteriorated. You said that you're trying to improve CCC, but working capital in total has been negative at 200 billion. Any factors behind that? Answer. Cash flow from operating activities. For one thing, UK railway system, IEP business, on the order of 140 billion. In fiscal year 2017, we have revenue from that, but that is no longer the case this year. So that is one of the factors. Other than that, construction machinery. In that segment, there has been an increase in working capital. That is what is required. And we have to spend costs right now, and it will be recovered by increasing revenue going forward. But CCC is deteriorating because of the inventory and reduction in profitability in Hitachi Metal, Hitachi Chemical, high functional materials. There's been a decrease in profitability because of those factors. Operating income has deteriorated. Question. Toward the end of fiscal year, CCC, or rather answer, well, CCC target by the end of 4 years is 70 days. We will work toward that. Well, thank you. Question. I would like to ask about inventory in terms of the absolute number. Isn't it too large? Answer. For construction material, we believe that inventory is somewhat large. But demand continues to be robust. So in response to the strong demand, in order to eliminate opportunity losses, we are building inventory. That is where we are. Therefore, it is large at the moment, but we need to review the content of the inventory closely within Hitachi Construction Machinery and make sure to optimize the size of the inventory. That's what we're planning to do. Question. Thank you. My second question has to do with extraordinary losses or factors associated with that. Automotive systems related sales, that's one. And second, Horizon Project. Number three, agility. These are the three largest factors from what I see. But for each, what is the amount? And do we need to worry about extraordinary losses being posted next year and onward? Answer. Regarding Horizon, well, this is a one-off expense for fiscal year 2018. For the Horizon project, assets are very limited. Very little asset remaining. So 21 billion yen of cash that we need to expand in the fourth quarter, and land. That's about the only assets. And we have appraised the land very limited. So there is no possibility of additional impairment loss to arise. So Horizon project-related cost is viewed as a one-off expense. And extraordinary profits, 65 billion from Clarion share sales, and 3 additional deals, 30 billion. That is the proceeds of the sales of the shares. And they're being posted as part of the non-operating profit. Question. So 3 deals, 2 auto-related and agility. If you could answer, if you could please look at page 15, topics. So structural reform of automotive systems business. The 3 deals that we talked about are the 3 bottom deals, excluding Clarion, Hitachi Automotive Systems Measurement, Commercial Vehicle Steering Business, and Hitachi Vehicle Energy. All these 3 combined, 30 billion. And agility, trains. We do not disclose what the actual number is for agility. But these are the main sources of sales proceeds from structural reform. Question. Agility's sales was done in the second quarter, according to my recollection. Was it in the third quarter? Answer, it was in the third quarter. My last question, you talked about automotive systems earlier. At this moment, those related to EV ADAS, those not related, they're both. In terms of the scale of the businesses, if you separate those that are competitive and those that are non-competitive, what's the idea, roughly? Answer. We will be selling and buying. We will be doing both. So automated driving and electrification. In conventional areas other than those, we're trying to select and focus. So in conventional areas, aside from ADAS or electrification, if in some areas we expect ourselves to occupy a powerful position globally, we will continue, but otherwise we will not. So we will be selecting and focusing on that. That is our policy. But at this moment, we have yet to quantify what the amounts are, but at least the policy is as I have just described. Thank you.
前から2番目の方お願いいたします。
ありがとうございます。
Question. I have 3 questions. The first question is regarding the macroeconomic environment. Fourth quarter risk was mentioned, but in the longer term, for the fiscal year, as well as beyond that, Brexit, as well as the trade friction between the US and China are occurring. How will this have an impact on your business? Should we consider a direct impact? Please elaborate. Now, in terms of direct impact, first of all, regarding the macroeconomic environment, it remains opaque for fiscal year 2019, and beyond that, it remains uncertain. For fiscal year 2029, specifically the semiconductor as well as smartphones, railway, automotive, and in the recent past, high functional materials and automotive systems have been impacted. The demand trend remains very difficult, so we will have such assumptions in place. On the other hand, for social innovation business, such as information and industrial and distribution, new investment in plants not only limited to that, but within the current plant environment, productivity improvement as well as improvement in quality as well as higher efficiencies are focus for the customers, and the visualization of the plant environment could use our technologies such as AI as well as IoT. And fintech is also a new area where we can provide services for efficiency and generate new services. So there is such activities taking place today. And this will provide business opportunities for our company. We have announced today the business structure change. And globally, we will identify areas of focus, and we will aspire to become the global leader. And organization has changed accordingly so that these businesses of focus can be further expanded. On a specific event basis, Brexit, if it is going to be a no-deal Brexit, it is likely to have an impact on the overall economic situation. So we are hoping that this will not be the case. It can be avoided. That is what we hope for. But looking at the domestic business in the UK, our main business is the railway systems business. We have backlog in terms of orders, and in terms of demand, we have plant in Italy as well as the UK, so we can respond in a flexible manner. In terms of parts for the railway systems business, we are trying to procure locally as much as possible. This has been an important focus, and currently we have reached the level of 70% of the rolling stock that we produce in the UK. 70% are procured locally. Therefore, direct impact of Brexit is limited in that regard. But overall, it is likely to slow down the macroeconomic environment, whether it be Brexit or whether it be the trade war between the US and China. We have to watch very carefully what is going to happen in terms of negotiations going forward. In terms of demand structure, we should focus on business that will not be subject to economic cycles. Services and solution business must be expanded so that we will not be subject to economic cycles. But obviously, cost reduction is first and foremost important for us. This is not just for procurement basis, but in fact, we are able to now absorb the material cost increase by cost reduction efforts. But we have to also, at the same time, enhance the efficiency and reduce losses. And we shall continue with these activities going forward. Second question. Looking at your performance, it seems that there is a disparity between the business segments. It is probably because of the sensitivity to the macroeconomic environment. But it seems that in the parent company you have very good performing companies, but in the group companies there have been some issues as well, and there are underperforming businesses as well. So what have been the issues identified, and what kind of improvements are underway for the whole group? Answer. Within the business units in Hitachi Limited, we are seeing improvement being made. We had times that were very difficult in the past. And at that time, group companies were doing better than the parent company. But the internal business units have improved its performance now. And now the subsidiaries governance must improve further, as you have rightly mentioned. group governance will have to be enhanced to a higher level. The quality issue, and regardless of within or outside the group, we must do make better efforts in terms of quality assurance and performance outlook, as well as changes in the environment, must be fully understood. And performance governance is very important. And it is very much a part of Hitachi Group's governance. For example, in my team, the structure of the finance department, as well as the compliance, we have to make sure there are no issues with the statutory auditors must be allocated accordingly so that supervision can be made. And in a wider context, global governance must be strengthened as well. Question, or rather, supplementary answer. In terms of governance, we're making improvements, and as shown on page 30, consolidated subsidiaries, we had 879, and by December we have reduced that to 840. So this is also being improved.
前の方お願いします。
Any other question? Question. I have 2 or 3 questions that I would like to ask. First, regarding organizational structure, as of April 1st, there's going to be a change. In terms of human life, automotive systems business is included as part of that. Smart life, eco, healthcare, I do understand those being part of it, but automotive being part of that group, I wonder why. Perhaps automotive should be a separate business unit. I feel rather uncomfortable. It seems that it belongs to somewhere else. So if you could comment on that. Answer. Well, the idea behind the organizational structure is such that so far products and services were grouped in different groups. And we had a front office function above that, but we would like to be more front office oriented. We would like to be closer to our clients and their requirements, and that is why we have changed the grouping. Mobility, human life. These are human-centric areas. There's industry as well as energy. And IT, which are going to be the platforms. So automotive systems being part of human life. This area of human life has to do with the issues related to people's lives. We want to improve quality of life for everyone. That is how we have defined this area of human life. Hitachi Automotive Systems business is to be based on human-centric ideas to provide more comfortable living environment for the people. That is how we have defined it. And that is why we have included automotive systems business as part of human life in the new structure. Well, question, thank you. My second point that I would like to ask is as follows. As was mentioned in one of the earlier questions, what is uncertainties abound with respect to semiconductors, smartphones, and FA? It seems that there are common issues besetting these areas. So semiconductor and smartphone, these are huge industries. And the likelihood is that they're going to have sharp declines. And under this organization, there are no units who can have across-the-board BU that would handle these areas. So these segments are very likely to see declining profitability next year and onward. But there's new BU that will be responsible for that. You will commission two subsidiaries perhaps, but it will be a subsidiary's responsibility. Semiconductor business, how sharp a decline will China have? That will be the most crucial point. And who should I ask those questions in the new organization? If you could please comment on the situation. Answer. So you're asking about the structure? Question. The impact on profit and loss. Well, that is exactly the issue that Hitachi is confronting. Who am I to ask? Is it Hitachi Chemical, Hitachi Metal, the parent? Who should I address this question to? I don't even know who to ask those questions. Answer. Well, there are listed companies that are responsible for the areas. Question. Who's going to control the declining business? Answer. Hitachi Corporate. The president and CEO, myself, will be ultimately responsible. Well, first of all, the front office will capture the situation, and there are listed companies within the group that you mentioned earlier. And of course, each of the entities will be responsible for their respective area, improvement to be proposed. And as parent, we will be monitoring their businesses. That's the cycle we will be implementing. As you asked, and as was asked in an earlier question, we need to have governance and appropriate forecast. We will have solid governance in place. Question. So semiconductor, smartphone, and FA. What's going to be the degree of negative impact, and when will it manifest, according to your forecast? And I'm sure Hitachi Corporate is recognizing that, realizing that, but we are interested in when these areas will start to recover. Answer. Well, it's hard to say when it will start to recover. Well, how much negative impact is it having? I would like to ask that. Answer. In the second quarter, we have already seen quite tough conditions for those businesses. At the corporate level, 20 billion yen of buffer has been allocated as a risk buffer for these areas that you mentioned. What was it based on? That's because of their performance, and we've had governance over it. Toward the end of the second quarter, these businesses actually started to deteriorate, and deterioration became even more manifest in the third quarter. Well, then, when are we expecting recovery? Well, that is a question that I would like to ask of you. What are your views? I would love to have discussions with you. Question. Well, we may have a separate occasion for that. So deterioration started in the second quarter. The same with China's business, I believe. You talked about the buffer. And of course, as a corporate, you allocated a risk buffer. Now, what is the size of the negative impact? How should I view it? In the second quarter, third quarter, or on a full-year basis? Answer. That is why we are making a quarterly report and making announcements in terms of the size of the impact. Question. With semiconductor and FA, how much is it? For each subsidiary, it's hard to see. But it seems that they're being beset by common issues. So semiconductor, FA, China issue, we can exclude China. Answer. Well, overall, it's hard to say what the numbers are, but what is happening is pretty clear in terms of our segments. High functional materials and components has seen the severest impact of deterioration, and automotive systems. And semiconductor, Hitachi High-Tech electronic systems, they're being impacted, but there are different developments there. Customers' investment cycles we have to consider, which is separate and different. So semiconductors, smartphones, and FA, materials for those products, these two are the areas which have been impacted most. Thank you. My last question is as follows. Smart Life and eco-friendly systems, it seems that the forecast seems to be rather difficult. What are the problems and what are the solutions that you are thinking of implementing? Answer. For one thing, overseas sales, especially in the Middle East, have seen decrease. So sales of white goods in overseas markets, I think we need to improve the structure of the sales channels and the sales structure or systems. And another factor has to do with rising material costs, which have impacted us negatively. On a consolidated basis, the impact of rising material cost and price has been offset by cost reduction efforts. But in Smart Life and eco-friendly systems, we have not been able to catch up with the rising price. So we have to accelerate our cost reduction initiatives. Question, when you say Middle East, are you talking about your air conditioning business? Answer. Well, the overall business. As you know, market conditions in Middle East are deteriorating, as you know. So overall business in Middle East has been deteriorating. Thank you.
この一言だけもしご質問があるよ。
Now, any further questions before we close? There seem not. Therefore, we would like to bring this meeting to a close. Thank you very much for your attendance today. Thank you.